Hi everyone, this is Stats Trader. My name is Pasha, and this YouTube channel is about learning to apply basic statistics for stock trading. Now, for some of you who know me, I turned $950 that I started trading in the beginning of February 2020 into roughly $16,000. And now I'm turning $13,000 into $100,000. So this is what this YouTube channel is about. Now, in this particular video, I'm gonna show you how to build a spreadsheet for my most successful setup. This setup that made me hundreds% profit in 2020. This setup is very basic, and I think a person without any Excel knowledge can build their own spreadsheet and track this strategy. So let's not talk much, let's just jump in and I'll show you everything on my computer. Now you open your Excel spreadsheet, right? First thing you need to do is to fill out these basic cells. So these are the cells in which you're gonna have most of your data. So you're gonna write down date, ticker is the company that you're tracking the statistics on. Now, open price, closing price, pretty much self-explanatory. Now, parabolic decline low. This parameter, this cell basically explains where was the low of this parabolic drop. The same thing as parabolic decline high is the value where the parabolic decline was ended and how far it went up. So here would be parabolic decline high. And then of course you need the percentages. Now parabolic decline percentage is how much the stock declined from the open, so from here, percentage wise. So you have to calculate it and put it in a cell. Parabolic bounce percentage is the percentage value of the bounce from the lowest point of your drop, so it's here, to the bounce top, so right here. So again, percentage wise, how much was the bounce. Now percentage gain on a day is basically how strong or weak the stock price closed on the day. Profitable or not, you're gonna say yes or no. And winning percentage is basically the amount, it's the formula, it's amount of positive outcomes divided by the total amount of outcomes. Now these three cells are extremely important. I would say one of the most important cells, one of the most important data that you can track. Time, so when did this happen? This particular pattern happened at 13:30 New York time. Duration is the parameter that describes how long it took for a stock price to drop. So I usually take some kind of consolidation area, so here, and I would take like the highest point, so here, and how long in minutes it took for the stock to drop, and I would write down this duration. Day of the week is basically, well, self-explanatory again. What day of the week this particular pattern happened. So let's just go ahead and fill out these data and I'll show you how to do the formulas. Now we need to calculate the percentages, and I already have them calculated because I've been doing it for 2.5 years, just tracking data like a crazy man. So yeah, this is the formula. So basically you put an if statement here in your command bar and you say if C2, which is open price, equals nothing, then give me nothing. Otherwise, take the open price minus the parabolic decline low, so open price here minus the parabolic decline low here, and divide it by open price. So that's how you get the parabolic decline percentage relative to the open price. Now another thing is the parabolic bounce percentage. It's the same formula, but kind of inverted. So you say if E2, which is parabolic decline low, equals nothing, then give me nothing. Otherwise, give me F2, which is parabolic decline high, minus parabolic decline low, and you divide it by parabolic decline low. So that's how you know the parabolic bounce percentage for this particular stock of when this happened. Now the gain on the day, it's the same thing. If C2 open price equals nothing, then give me nothing. Otherwise, say closing price minus open price and divided by open price, and you get the percentage gain on the day. Now, why do you need these if statements? If statements make your table dynamic. So let's say, oops, my bad. If I have nothing here and I drag it down, you see I have the empty cell. If I didn't have this if statement, I would have some kind of ugliness here, and it's never good. So now, was this trade profitable? Well, obviously, the way I traded this trade actually last Friday, I think I made $150 in it. I would wait for this green candle, and I would buy, and I would set my stop loss right here, so around 9 cents, 9.50, something like that. Again, not exact science. And I would wait for this bounce. And was it profitable? Well, of course it was profitable, so I put yes. Now, winning percentage, I'm going to show you this formula later, but it's basically the amount of positive outcomes divided by total number of outcomes. Now at time. This pattern happened at 13:30, and you want to always round up this number, so if it's, let's say, 1321 or 1307, you always kind of want to round it up. Why? Because later on, when you have hundreds and hundreds of data points, and let's say if you want to see a graph, you want to build a graph in Excel when this particular pattern happens. For Excel, it's easier to convert these numbers that you're going to have in this column, to convert it in some kind of a numeric form, and you can build columns and you can analyze it a little better. Now, what was the duration? So duration, how long it took for the stock from the, what do you call it, consolidation area, how long it took to drop in minutes. So I put 60. Again, you want to round up this number to minutes also. Again, this will be extremely important, so you can cut out losers later. And day of the week, this actually, again, you can manually write it, but I don't do it manually because there's a formula for it, and it's basically equals text, and then open parentheses, you make a reference to your date cell, you put comma, and DD, and you close it, and there you go. You have, you know that this particular trade happened on Friday. So this is all the data you need for now. Now, later, when you gather more data, you can come up with a formula to calculate your winning percentage, because then you can use count ifs formula to calculate how many yeses you have in this column and how many no's you have in this column, and then take the positive outcomes and divide it by total outcomes, and then you have your winning percentage. Now after that, you want to create a few more cells where you count how many yeses you had in this column, and let me just squeeze it a little bit so you have more space. Yeah, how many profitable trades you had and how many negative trades you had. So the formula is here. It's count if statements. Again, all of these formulas you can find it on YouTube if you're not familiar. I'm kind of lucky because my major back in school was heavily related with Excel, so it's fairly simple, but I understand that for someone who never used Excel, it can be extremely hard. So I'll try to take my time and explain it very slow, but yeah, bear with me. So count if statement, and you make a reference to J2. So basically you say, give me this range and count how many yes statements I have in this range. And I hit enter, and as you can see, I have just one yes and 0 no's. So for no, it's the same thing. It's count if statement. We say range from J2 to J100, 4,000. No, well, I can read this number. Anyway, no statements, I have 0. Oops. And, oh crap. Winning percent. I don't have it written down, but okay, let's just do it together. So we need to calculate what our winning percentage for this strategy. So we say equals. We need to calculate it real quick. So again, this particular formula is you take the amount of winning trades divided by sum of these two. So you're gonna say equals amount of winning, which is this column, and you want to anchor it, so you put F4 and you divide it by a sum of these two. Oops, let me figure out what happened now. Gosh, I haven't done it in a while. Well, of course, the parentheses mistake. Yeah, I always make that mistake. Alright, so P1, which is the positive outcomes, 1, divided by sum of P1 and Q1, so these two together. So far, because you only have one recording of this strategy, your winning percentage is 100%. Now I'm gonna go ahead and delete this one because I kind of need this space here, and let's just pretend like we collected the data. Again, I have data for around 2.5 years for this particular strategy, or actually around 2 years of data. So I have hundreds and hundreds of data points, and I'm just gonna grab some data from my spreadsheets, and I advise you not to copy this data. I'm gonna paste in here because I'm gonna completely randomly take them out of the spreadsheet. Does that make sense? So it can be seasonality problem. Well, what I'm saying is some data are going to be taken from winter, some data is going to be taken from spring, and you can really rely on this data. So basically, yeah, don't be lazy, collect your own data, collect your own statistics, and I'll show you in this video how to actually come up with your own edge in this. Now we're going to the most important part of the video. So make sure you watch this part because I'm going to explain you how I'm analyzing my spreadsheet. So let's say, you know, you've been tracking data, I don't know, for 1 month or something, and you have some kind of an idea what the heck is that you're doing, you know, like how you're gonna trade, and you have these sets of data. Now, first thing what you need to do is you need to create the column with averages. So you're gonna put insert, and wherever you see all of these percentages, you're gonna have the average. So you're gonna put equals average, and you need the average of all of these numbers. So you're gonna put G3 through G, let's say 100, right? So you got your decline, and then you can kind of drag it along here. So, and make sure you make them stand out. Well, this is kind of ugly. Just make them yellow. So what does it exactly tell you? You know that on this data collected here, your parabolic decline percentage, as how much stock went from open to its lowest point, is 37%. Parabolic bounce percentage, however, is 48%. And gain on a day, pretty much you see that it's negative 22. But really how I use it is I see that the stock pretty much closed negative, closed red on a day. So that's kind of important. And you see that your winning percentage is 77%. Now, again, this is a really tiny piece of data. I've been tracking data for over 2.5 years. So yeah, it's a lot of work, but it's only a lot of work at once. If you just sit down and do it all at once, it's a nightmare. So I'm not asking you to be, antisocial, weirdo, loser, not go to any parties, not to meet people and just track data all day long. No, that's not the point. It took me 2.5 years, but I was doing it every single day, Monday through Friday, for 10 minutes. So it literally takes you 10 minutes to track these data. And then after a year, 2 years, you're gonna have enough data to trade and to really kill it. You can basically take a small account and you can double, triple it, quadruple it. You can make 1,000%. It just all depends on you. But this is the way I track my data. Now, let's see what kind of insights I can get from this data. So let's look at my trades where I lost money. So you see profitable or not, and no. Now I see that for all of my profitable trades, if I look in the market cap column, all of my trades were in the range between 100 million market cap to 500 million market cap, right? So that's the first point that I want to make is, so I'm looking at the market cap and I'm thinking, okay, so I'm more likely to make money on lower market caps, because look here, market cap is around $1 billion. That's not optimal market cap, first of all, and secondly, see, I lost money on this trade. So next time I'm not gonna touch anything that's close to 1 billion market cap. Right now, second point, look at these guys here. I lost money on this trade and I lost money on this trade. On this trade, market cap was 38 million and market cap on this trade was 70 million. So I know that I can basically cut out these losers. So I know if I see a stock drop 30% or 40% or whatever, if their market cap is basically below 100, I'm not going to touch them because I'm more likely to lose money. Now, if my market cap is above or close to 1 billion, I'm also not going to touch that because, again, parabolic bounce is very low, because it's a lot harder to make, let's say, a Tesla stock go up or Apple stock go up because it's a huge market cap. So the same idea is here. That's why I stick to lower market caps, but I don't go too low. Why? Because, well, if this market cap is below 100 million, then nobody really trades it, and there's no point for me to trade it. Now, another thing that I can look at is the time. Now, you remember I've been recording time, and I look at my spreadsheet and I see that most of my profitable trades were made before 11 a.m. New York time, right? So this trade was, 10 a.m. This was negative trade 12. So again, it's kind of, your data will be more consistent, and if you track it for a year at least, you're gonna see these kind of things where you set your rules. You can set your rules. Another thing is duration, how long it took for the stock to drop. And you see for the most profitable trades, all of the profitable trades, the duration was below 90 minutes. So that's another insight. So basically, if I had all these data and I wanted to make a decision how the heck I'm going to trade this pattern and how can I maximize my profit, I'm gonna know that first of all, I'm gonna stick to dip buying market caps 100 million or above, but not more than 1 billion. That's the first point. Secondly, I'm gonna stick with the stocks that have low duration, which means it took them below, let's say, below 1 hour to drop. So if it drops 30 minutes, but it took it 120 minutes to drop, it drops 30% in 120 minutes, I'm not going to touch it because more likely it's going to be a negative trade. And the same thing you can do for time, like I said, and the same thing you can do for the day of the week. If you see most of your negative trades happen, let's say Wednesday or Thursday, well, guess what? You better not trade Wednesday and Thursday. And that's how you really look at your Excel spreadsheet and you make a decision whether or not you're going to buy it. Now, like I said before, it's going to take some time, but at the end, it's going to be so worth it. And this is just the one strategy that, I kind of give you an idea. I have 5 other strategies and massive spreadsheets with thousands and thousands of data. This is the most basic one, just to kind of give you an idea how the heck I do it and how I was able to turn $950 into $17,000 now in 10 months. So yeah, thank you guys for watching, and stay tuned for the next video. I'm gonna post a video about online trading where I recorded all of my trades online, and thank you for watching. See you next time.